Welcome to Trador's tutorial number 3, which includes template strategies, market simulations, time, and calendar view. Trador reveals the innovative and exclusive template strategies, a powerful and effective tool in the derivatives market. Template strategies enables the user to actually record any successful strategy as template and retrieve it for any expiration period or underlying asset. Let's see that. We'll create a ratio call spread strategy with the strategy wizard. Reduce risks by clicking on the Add Hedging button, so that Trador added the buy call 240. Raise its strike till I have a profit on a down market. To call 265 and add a few units to its quantity till 18 units. So I'll still have profit if market stands still or drops, and we'll have profit if market goes strongly up. And of course I see that there are still 44 days till expiration, so still a lot of time remaining. Also, I can see on the graph that strategy's loss begins at the zero crossing point of 245.41, and it's about 6.5% far from the spot, so it's okay with me. We can see that I still get or loan money from the market, since the current investment is positive $630. I'll use the Simulations table submenu, so when the mouse is over it, I'll click the right mouse and activate the Save as Template function. Now I can save this strategy as a template strategy, so that I can use it at any time and with any asset. I'll name this template as 44 days to expiration, market still or down, 6.5% distance up, a meaningful name, and confirm with the OK button. OK. Now I can hide this strategy list and clear the position by clicking on the Clear Position Quick Action button. Then I'll load another asset by clicking the Load Underlying Asset button, choose Apple, and confirm it, so we see the new asset. Over the Simulations table, I'll click the right mouse button and activate Load Templates function. The strategy list is displayed. And I'll just unzoom the graph a bit so we can see a wider spectrum. And we can see the same template on another asset with the same risks on the graph. See the distance from the red area, similar to the previous Amazon asset. This is the way to create many templates and use them with great efficiency at any desirable time, period, or asset. Market simulations is an essential tool for examining the risk levels of any position. Examination is done while evaluating option prices with the Black-Scholes formula on various market scenarios and comparing them to the opening position prices. So, let's use our last template and examine it. We'll right-click the mouse while it's over the Simulations table and activate the Load Templates function. Since we have only one template, Trador is already focused on it, so we can hide the template list. For examining various scenarios to this position, I'll add it to inventory by clicking the Quick Action button. I won't save it, since it's just an examination, and while on the inventory table, its prices are fixed, just as if we've executed it for real. Market simulation is activated from the Simulations table right-click submenu, or by clicking the Market Simulations button on the top buttons line. The Market Simulation screen displays the options market prices, Black-Scholes calculated prices, and the Greeks on the right table, and implied volatility on the left table. We can change the date a few days ahead. The interest, dividend, the index, and volatility. General volatility is assets volatility that will calculate all options with this implied value, and custom enables modifying specific implied options. The most accurate volatility is the default implied natural skew of each option. Here we can add some percentage to the calls, reduce from the puts, and so on. With every change of every parameter, we can see the Black-Scholes price and the Greeks being calculated. We'll make it easy and just confirm it as is with the top left button. A yellow market simulation panel is displayed, pointing on today's date and present index. The yellow color indicates a special view, in this case, a future scenario market view. Also, the prices on the simulations table are indicated as changed, since they are automatically Black-Scholes computed. We'll change the date to number of days ahead. Notice some changes, such as options market prices, expiry boundaries probability points, the current index on the graph, and also the closure profit or loss calculated. Let's see how many days we'll have to hold this position, assuming that the market is staying still till we have profit. So we see the theta working for us, and after 6 days or more, this position will have profit. Now we can reduce the index and see the calculated closure or raise it and see the calculates closure profit or loss. So, reevaluation of every position for its actual market risk is made easy. When closing the market simulation panel, everything is displayed normally again. Now clearing the inventory unsaved position, and it is placed as original position on the simulations table above. Another way of analyzing the position's risk is the time view mode. We'll activate it by clicking on the profit-loss table at desired expiry date button, placed on the bottom line on the right. Notice the yellow time view panel displayed, indicating a special view and the yellow closure days label. Time view mode is calculating original position opening, along with its closure at the examined date with Black-Scholes prices, displaying the profit-loss and graph spectrum. Of course, we can change the Black-Scholes parameters on its yellow panel, such as the date, interest rate, and implied volatility of both calls and puts. The recommended volatility is the natural skew, for example, implied, on both calls and puts. So calculations are made with each option's implied volatility at the present market point. Placing the mouse over the graph displays each point information as well. Closing the time view mode is done both with the large expiration view button on the yellow time view panel, or by clicking the profit-loss table at expiration view button placed on the button line. Calendar view is activated by choosing all expirations from the expiration combo box. Trador then displays its yellow panel parameters and also the calendar filter. We can control the options that are displayed with the filter. Now the simulations table is sorted by expiration date and strike, which we can sort for convenience only by strike by clicking the Strike Control button. Each period is displayed with a different color, and we'll see the same strike for each period, one after the other. Now, creating a position is easy, and the same as in a specific period view. Let's build a position by buying the December 2012 put 230 and selling the January 2013 put 230. Gather them on top by clicking on the Active Control button and play with the date on the Calendar View yellow panel. We'll see the immediate effect it has on this or every other position. Closing the calendar view is done by choosing a specific expiration period or both with the large Expiration View button on the yellow Calendar View panel, or by clicking the Profit Loss Table at Expiration View button placed on the button line on the top. That's it for this tutorial.